Good afternoon, everyone. I'm Charles Payne. This is making money. So earlier this year, the stock market survived a well-crafted campaign to spark a crash. But the financial media and Wall Street purists, they did succeed in a short-term tariff tantrum. And we're going to get back to that, maybe again. But, here's the thing. Once again, the establishment really just very frustrated, obviously, saying President Trump's going to push us toward a crash. He's going to be the fall guy when it happens. The second offense against the market, of course, the second offensive against the market has sparked a big surge. Now, people are or have been searching stock market bubble. It's come down a lot here, but, these articles go out, these stories go out. It's designed to create anxiety out there. Now, if the nation were gripped with irrational exuberance, a few would bother to even Google this, right? So this kind of goes against the grain. Now, currently, the rationale for hating the stock market is in part that it's too successful. Think about this. They're planting seeds out there saying, okay, if we do start to tick higher, then listen, maybe you want to bail out because the S&P, this would be the third year in a row. If we were up 20% or more, it's only happened once before, and that was right before the crash. You get what's happening here, right? Now, of course, it does seem natural to think that markets trading at all-time highs are really closer to the end, although it never ends. Keep that in mind. But the fact is, markets that are trading at highs, if you buy them at highs, here's the thing. Typically, 6 months, 12 months, and 24 months later, they're actually higher than normal. Keep that in mind. Now, I think there's too much fretting out there, particularly about these mega cap stocks and their outsized role. And of course, 41% of the market, 30% of earnings. Where's the difference happening? Well, here's what's going on. The names driving this rally these days are further down in the AI chain. These are your biggest winners of the year. Western Digital, 263. These are percent, folks. Robinhood, 250%. Seagate, Micron, Palantir, Lamb Research. Remember those names I just tattled off because these are the names investors are placing their bets and their hopes on. And, of course, they haven't disappointed because, you know what? They've all mastered one trick. It's the art of the bend and snap.